Hello and welcome to this video on the potential fall of the US dollar. The US dollar is one of the most widely used currencies in the world, and the global economy is highly dependent on it. However, there are growing concerns that the dollar may be losing its dominance and could potentially face a significant decline in the future. In this video, we will discuss the factors that could contribute to the fall of the US dollar and the potential implications of such an event. One of the main factors contributing to the potential fall of the US dollar is the significant increase in national debt. The United States government has been running a large deficit for many years, and the national debt has reached unprecedented levels. As of 2021, the national debt was over $28 trillion, which is more than 130% of the country's GDP. This high level of debt could potentially lead to a decrease in investor confidence, and could ultimately result in a decline in the value of the US dollar. Another factor that could contribute to the fall of the US dollar is the increase in the use of alternative currencies. With the rise of digital currencies such as Bitcoin and Ethereum, and the growing popularity of currencies such as the Chinese yuan, there is a possibility that the US dollar may lose its dominance as the world's primary currency. In fact, some experts have predicted that by 2030, the Chinese yuan could potentially replace the US dollar as the world's primary currency. Finally, the current trade tensions between the United States and other countries could also have a negative impact on the US dollar. If the United States continues to engage in trade disputes and imposes tariffs on other countries, it could lead to retaliation from these countries and could result in a decrease in demand for US goods and services, which would ultimately harm the value of the US dollar. If the US dollar were to fall, there could be significant implications for the global economy. One of the most significant impacts would be on the value of other currencies. If the US dollar were to decline in value, other currencies such as the euro and the Japanese yen could potentially increase in value. This could result in a shift in the balance of power in the global economy, with other countries potentially becoming more dominant. Another potential impact would be on international trade. The United States is one of the world's largest exporters, and a fall in the value of the US dollar could lead to a decrease in demand for US goods and services. This could ultimately harm the US economy and could result in a recession. Additionally, a fall in the US dollar could also make it more difficult for the United States to borrow money from other countries, which could further harm the economy. In addition, a fall in the US dollar could potentially lead to an increase in inflation. As the value of the US dollar decreases, the cost of imports would increase, which could result in higher prices for goods and services. This could lead to a decrease in purchasing power for consumers and could ultimately harm the US economy. Finally, a fall in the US dollar could have implications for the global financial system. The US dollar is currently the primary currency used for international transactions, and if it were to lose its dominance, it could potentially lead to a significant shift in the global financial system. This could lead to increased volatility and uncertainty in financial markets, which could have negative impacts on the global economy. In conclusion, the potential fall of the US dollar is a significant concern for the global economy. While there are several factors that could contribute to its decline, it is important to remember that the US dollar is still one of the most widely used currencies in the world, and it is unlikely that it will lose its dominance overnight. However, it is important for policymakers and investors to be aware of the potential risks associated with a fall in the US dollar and to take steps to mitigate these risks. One potential solution is for the United States government to address its national debt and deficit issues. By reducing the deficit and implementing fiscal policies that prioritize sustainable economic growth, the U.S. could regain investor confidence and prevent a decline in the value of the U.S. dollar. Additionally, the United States could work to improve its international relationships and reduce trade tensions with other countries. By engaging in fair trade practices and promoting economic cooperation, the U.S. could maintain its position as a global economic leader and reduce the likelihood of a fall in the US dollar. Furthermore, investors could diversify their portfolios by investing in a variety of currencies and assets. This could help to mitigate the risks associated with a decline in the US dollar and could potentially provide a hedge against currency fluctuations. Additionally, Central banks could work together to maintain stability in the global financial system and could potentially develop new mechanisms for international trade and finance that are not dependent on the US dollar. In conclusion, while the fall of the US dollar is a significant concern for the global economy, it is important to remember that there are potential solutions and strategies that can be employed to mitigate the risks associated with this scenario. By addressing issues such as national debt and trade tensions, and by diversifying investments and promoting international cooperation, we can work to maintain stability in the global financial system and ensure a prosperous economic future for all. Thank you for watching this video, and we hope you found it informative.